All right, ladies and gentlemen, this is a trade we have taken here, currently live. I'll show you the execution or the P&L, whatever you want to call it. So here we took this trade. Main reason why was because we see a market maker sell model forming on the 15. But if we go to the weekly, we can just see again here on the weekly, we're just time frame pairing. This is our internal resistance liquidity. Our external resistance liquidity would probably have to be the previous day low if we're targeting an external level. But again, that weekly SIBI, we're hitting it, and then eventually from the weekly we dropped down to the 4 hour, and then we just saw that we were taking out all these relative equal highs up here. We're just taking that out, and if we drop down to the 15 minute, I should say, not the from the 4 hour to the 15, and the 15 to the 1 minute. That's how you time frame pair. I've been working on that recently. But on the 15 minute, we saw that we swept buy side, and it was eventually a big market maker sell model here forming with a smart money reversal here, and then eventually I dropped down to the 5 minute. And I saw a break in market structure. I saw a balanced price range here, and if we never returned up there, that just instantly told me that, you know what, we're gonna be very bearish. So as soon as I saw this one right here, see this little line right here, this little line right here for this fair value gap here, the SIBI that formed, I pretty much entered as soon as we got an institutional order flow entry drill, and you can just see it clearly, clear as day. Institutional order flow entry drill, we tapped the quadrant, then we dropped. Currently my stop loss is at break even right now. Main reason why we have another sell side imbalance here, and then we have all these inversions. So I plan to see these use inversions, and I'm gonna take a profit at the equilibrium of this range right here, from this low all the way up to this high right here, and you drag that out. That's just pretty much equilibrium. I started an FTMO free trial account just to prove to people that, you know, I guess on stream I was streaming on my CEO account Roxy, and pretty much I just decided to start up an FTMO account. I'm gonna document it for them, and this is the first trade here I'm gonna show you guys on the SMT channel. I guess I'll document it on there too. I guess I'll do both really. So I'll just update the stream and I'll make this video on the SMT channel. So we have here again market maker sell model. If we drop down to the 1 minute, you can just see it clear as day. All these lows got broken through. We came back up and then we dropped. So I'm just being very patient here on the 5 minute. I think the 5 minute shows it a lot better than the 1 minute. Plus we have all these inversions right here. I'm gonna want to see price come down to equilibrium, take a partial, and then eventually if we want to retrace, our stop loss is gonna be a break even. And of course, you know, yeah, if we want to form a market maker buy model, come back up, take these out, and then eventually start up another market maker sell model, then that's perfectly fine. Again, just Tuesday high of week here, weekly profile. It's a Tuesday, you can see down here, it's a Tuesday, November 7th. So yeah, no, just Tuesday high of week, a bearish indication here. And you know, if we want to continue dropping, then I don't have no means. Again, we're during lunch, so lunch is low volume, so I'll just be very cautious right now. That's kind of why I moved my stop loss to break even, but I'm gonna show you the trade right now. Here's the trade here. You can just see it clear as day, and it's FTMO, it's a free trial account. I'm moving the screen up and down. We just got this account yesterday. So first trade here, you can just see we risked 15 lots because for the details, you know, it's only one contract size. So a regular account would be like 10 contracts. That means I'll probably only have to risk like 1 lot or 1.5. For this one I did 15. You can just see here on the 5 minute we already moved our stop loss to break even, and we'll just lose like 55 cents. Now yeah, we're just waiting for the take profit one, which is equilibrium, and that's pretty much it. So I'm treating this account like it's a real live account. I'm taking only my setups, so the market maker sell model and the 22 model. I guess this would be your 22 model right here with the entry, because you get a break of market structure with displacement, and then you come back inside this fair value gap here, and then you enter there, and that's pretty much a clear market maker sell model here that formed with the 22 model, and that's kind of why I took it. And now yeah, that's pretty much it. You know, the trade idea may flop, may not, so it all depends on how ES reacts to this inversion fair value gap on the 15 minutes. Clearly NQ has respected it to continue up, but for ES we close below it, so I'm gonna want to see, you know, if ES drops after probably hitting consequent encroachment. So you know, that's something I'm watching right now. So if this consequent encroachment is disrespected, then of course, you know, probably gonna get stopped at a break even. That's kind of why I move my stops break even at this point. There's no point of not having it at break even. And so that's pretty much it. Drop even further, we drew equilibrium over here for the other one, so it was actually it was New York, so we're not even that far away from it. So I want to see this continue dropping. I want to see this one close below. So I'll up to you guys if we do. I'll just up to you guys, I guess, the next update. So yeah. All right, guys. So we have taken a partial here. We are currently hitting equilibrium. I want to see if we continue to drop or if we eventually have that reversal and we retrace and we create a market maker buy model here. This is the smart money reversal. Usually smart money reversals accumulate at equilibrium of a market maker model that you're in. So this market maker sell model here, we respect equilibrium, we create a market maker buy model, we just retrace. So NQ did close below, or it closed below consequent encroachment. ES did the same thing. So I wanted to see how we react around equilibrium. We took our partial. Our stop loss is still at break even, and we secured $78 of profit. So I'm gonna show you guys that right now. So you can just see that here with the big wick. I was ready for it. I was just watching it drop already, and as soon as it came, it tapped equilibrium. We took our partial stop loss at basically break even, and then that's pretty much it. We have $78 in profit, so we're close to, I don't even know how much of a percent we're up. I didn't really calculate the risk here. I got on the charts a little bit late, so I wasn't able to fully calculate the lot size, and I need to do that, and I'm just used to the 10 contract size. So overall, it's still just a really good trade. So we're just gonna be patient here. We're gonna let it run and do its thing. So yeah, we're just gonna see if it respects equilibrium, or if we disrespect it and complete the market maker model here. The less you focus on, like the less markets you focus on, the more in tune you are with them. So I think I recommend that for a lot of people. Just focus on less markets, and I promise you will become a lot better with those markets that you're trading. You can understand them a lot more. You're gonna be more. All right, as you guys can see, NQ is bouncing. We are respecting that buy side imbalance here in a deep premium for NQ. So yes, it's coming back up. It bounced off equilibrium, so I'm just gonna have to be very patient here. I want to see how the 15-minute candle closes on NQ, and just watching that. S1T is kind of very important to me right now. Again, the trade just bounced off equilibrium. That's kind of why I always tell you guys, if you're in a market maker model, equilibrium usually tends to show if your market maker model is going to get respected, or you're going to disrespect the equilibrium and complete it. If you respect equilibrium like this, you form another market maker model, and you go out and take out the high, or retrace back up into an imbalance, and basically you're just creating another smart money reversal area. So I just want to continue to see distribution. I don't want to see reaccumulation up anymore. I want to see that distribution phase is down. This is all accumulation right here for longs, another area for accumulation for longs. I just want to see the distribution phase is down. And for this FTMO account, we didn't risk much. I went to go look at the free trial, or the trial thing. I'm going to show you guys that right now. So we have that here right now, and you can just see our first trade was $78, and the profit target is 1,250 for this account is the 25k. So the 25k account, it's pretty big, so I should have risked a little bit more. I thought this was a 15k account. The 15k account is only 750. It's kind of what I thought it was going to be. So the next trade, I guess we're going to have to risk a little bit more. This was 7.5 lots, so probably double that. I'm going to do like 30 lots maybe, or probably 30 lots around there. And this trade was only 15, so probably double that. Again, time frame pairing is very important to me. I went from the weekly to the 4 hour, and then from the 4 hour I went to the 15, and then the 15 to the 5 minute. Even though it should be like the 15 to the 1 minute, but whenever we're on the weekly time frame here, we saw that sell side imbalance here. A little order block here with these self close candles, and again we were inside of a deep premium, not in a deep premium, but we're just above equilibrium here, and that's kind of what my eye was gravitating towards, more bearish prices soon. And this looks like it's about to complete the market maker buy model. So if we continue up, I see us taking out the previous month high and then dropping. If not, then of course that's probably pretty much we're gonna drop here. Probably some rejection blocks are gonna take this out and then drop. But from the 4 hour, from the weekly to the 4 hour, I just saw clear as day. All these relative equal highs, and if we draw this consequent encroachment here for this wick right here, you can see we hit the consequent encroachment, and if we close below it, then that'll give me a good indication here that we're most likely to be a little bit more bearish. Again, here we have a 1 hour sell side imbalance here, buy side imbalance, and then we have a breaker here, a little short term breaker. That's kind of where I want to see price come to and drop. Using this daily range here from this high to this low, or this low to this high, and just drop, and we drop. On the 15 minute, again, just clear as day, market maker sell model forming. Yesterday's price action wasn't the best. It was pretty chop. This one was a lot better. And if we dropped into the 5 minute, we saw the displacement, balanced price range, a sweep of liquidity, and we got the institutional order for entry drill, and that's where we entered. So it was a really good trade. I usually want to enter whenever the smart money reversal is happening. I don't want to enter like at equilibrium, near equilibrium. I think that's the worst place to enter. If you're entering near equilibrium, most likely you get stopped out. That's kind of why I love entering at smart money reversals. Usually, you know, I get stopped out whenever the smart money reversal doesn't happen. You know, it doesn't happen, enter too soon. Usually that is sometimes a problem. So I just try to wait a little bit more. Usually my confirmation here would be like a 22 model. That's kind of why I like the 22 model. You get a sweep, displacement, and then a retracement, and then you drop. It's pretty much like the easiest model to use. Or you can use SMT. Again, SMT would have probably told you here that we didn't even have an SMT though, but sometimes there'll be SMT. Usually don't need a market structure shift with SMT. Or if you sweep liquidity, not internal here, but external, then that would be even better, you know. And you could enter like at an order block. You don't have to enter at a fair value gap. So yeah, you could enter at an order block, proportion block, a breaker. You have a breaker. This kind of is a breaker here, I guess you can say. So with a high, low, higher high. So this would be the breaker here. That's why price moves so quickly. So yeah, no, all these confluences are just aligning up together. I forgot to update you guys, but the trade basically, as you can see here, we eventually lost. Not really lost. We were more of a break-even trade here. What our initial RR was a regular 1-to-1 we got for just half. So they get stopped at a break-even. As soon as I saw this fair value get filled up, this one right here, let me see, this one right here. As soon as I saw it get closed and then we were starting to rally, I already knew right then and there, especially on the 1 minute. Usually on the 1 minute it gives you a very strong indication right here. I kind of had some hope that we were going to drop even further, but as soon as I saw, you know, this become an inversion with like a little balanced price range, right then and there I just kind of knew like we were kind of screwed. We're trading both sides, and yeah, just really good trade, honestly. For 1 hour, I'm going to save it and I'm going to document it, I guess, for my trading journal. And that's pretty much it for the video. Hopefully you guys enjoyed. Hopefully you guys enjoyed the previous video, or I think I made it. Yeah, I'll catch y'all guys later for sure. Peace.